Hey everybody, welcome to This Week in Pre-IPO Stocks podcast. With me, I got Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Judd Mackrill, co-founder of Mile Marker. It's a consultancy for wealth management firms, and general partner at Mammoth, which is a health science and tech venture capital firm. Clint is away with clients up in the mountains this week with some of his folks. All right, so we got three topics today. One, we're going to do AI's new conversational sales product. I want to get you guys' thoughts on that. Elon Musk's xAI launches and IPOs are starting up again. Okay. All right. So first of all, have you guys seen this AI clip that this company published? I'm not sure if you guys had a chance to watch it.
I have. I wasn't terribly impressed.
Oh, you weren't?
No.
Okay, I was impressed. I was. Judd, did you see it? What did you think?
I was traveling yesterday, so I only saw little blips of it with the little blue line on Twitter. I didn't have a chance. I had a car full of kids. I didn't have a chance to listen to it, but it was the buzz.
All right, so let me describe it to you because I'm sure other people haven't heard it. And then actually, Nick, I'm interested to hear your thoughts. And then Judd, I'll have some pointed questions for you. But basically, this company, xAI, has launched this new product that they're just rolling out. So it's like in beta right now. But it's effectively like a customer service or like a sales AI. They had an example on there where Tesla was calling a customer and going through a process. The customer had visited the website. They were asking why they visited, series of questions back and forth. Then they the AI did like a pitch, like, hey, why don't you come in to the dealership for a meeting and we'll set the thing. It was all very interesting, right? I was blown away, and probably because I'm an old sales guy, right? So I remember doing 100 dials a day and being like, oh, this computer's doing this now, right? So but Nick, what did you think? What you said you weren't impressed. I'm interested for your opinion. Good.
You hear that long pause in between us? that awkward silence is exactly what's going on in this air demo.
You're right.
So
You're right.
every time there was a dispute or a question being asked, there's a big long pause, a big delay in the conversation. And it was abundantly clear that this was a robot speaking to you, just like when you get the teledialers that are hitting you up and it goes blip, you hear this blip in the background, and then they're asking you about Medicare, or they're asking you about any of these other things. I think it's a step in the right direction in a way.
Right.
But also, I really loved one of my old manager's feedbacks on the sales desk of one of the companies I was at. He just said, I love sales because we're never going to get automated away. So this is trying to do that, but I don't think it completely understands everything that you can get from it.
Sure.
There are other tools that will be able to help you with that.
Right.
For dispute resolution, you can pick up on tone of voice. There are companies that automate that. There are companies that have trigger words. It's almost like a manager can be called in or listening to the call when they say, I'm frustrated, or things of that nature. But this just seemed to be a clunky dispute resolution, just almost
Fair
the same thing when you're on the Bank of America website and you ask, how can I order new checks? You see the three little red dots, or it's just more of that is what I feel. I don't think it feels like a natural conversation.
There was definitely a latency. Although I do have to say, I did used to work with this guy who talked like that, and he was not a computer, right? He would have long pauses, and those were back in the day when there was no video call. So you were like, is he still there?
Right.
Right. But so all right.
Right.
So Judd, so you help advisors, you have this consultancy firm. You help advisors think about their tech stack and all that. I mean, are you talking with advisors about? I mean, some of this AI stuff I hear for advisors is coming in. Have you talked about any on the customer service side or what do you think?
Definitely. I mean, I think there's real uses for understanding information about what you already know or looking at scenarios. Advisors are really, they have to be careful here not to expose their data or their clients' data to anything in a public LLM.
Right.
Most people don't have, the means to really properly stitch it together. We do more and more of that stuff.
Okay.
It's interesting just to be thinking about it, but the skills that are in wealth management are, their soft skills. They are really built around personalization at a different level. And as soon as this stuff gets more automated, we will just elevate our expectations.
Right.
And advisors will be doing, more and more higher and best use sort of work on top of the technology we have. The scenario this takes me to is like, at what point are we going to have the robots selling other robots and humans just leave the room, and at which point, I don't know, there's a certain beauty to like the sale. The whole experience of it is kind of fun, and you want to work with people that actually do the work to sell you and to care and to customize. Otherwise you're buying things that don't really matter. So I could get selling widgets with AI, selling widgets to people that love widgets. That's great. But I don't know. It'll be interesting to see how it evolves, but I'm not fully against it. I'm not fully for it. I think that it's part of the evolution.
Yeah. Like the human phone call could be the equivalent to a handwritten note.
Is this you? Verify your actual humanity.
Right. That's right. Well, look, I mean, I will say this. So like, I was in asset management sales forever, like selling to advisors. Right. And, there was like this maybe a little old school, but there were like inside sales reps and then like outside sales reps. And the inside sales reps were like on a desk making dials all day long. You know what I mean? Like the same pitch all the time. People hanging up on you, telling you not to call you back, like the whole thing. The idea, like I remember I used to call like 100 people, 120 people a day and get hung up on 105 times. Right. Yeah. You know what I mean? So like the idea that an AI could do all those dials for me and then somehow like connect me in when they actually got a real person on the phone, like that's to me pretty powerful. Right.
So if we go in that direction, I think the fatigue will be substantially higher for the recipient. So if you got 15 of 120 with your stat right there, and I know you're pulling it out, it's going to be down to 2 out of 120.
Fair.
But nobody's going to care because you're just going to have infinite folks to call.
Yeah.
And
it's kind of like email marketing. Is that your point, Nick? It's like email marketing. Like everyone's getting inundated with emails. Yeah. I feel you.
It's hard to trudge through it. And I hang up a lot faster now when I get robo-dialed than I did 3 years ago and then I did 6 years ago, right?
Yeah.
So I think that fatigue is going to kick in and just be brutal. And I think Air is interesting because they've not positioned themselves as selling widgets. They've positioned themselves as like high profile, high ticket items,
right?
Because they want to kind of come across as the AI of choice, right?
Well, what's interesting though, to Judd's point though, too, like I could see, it's like a volume game, right? So, if you're just doing the math, you're like, look, I need this revenue. And if I can do something higher, that's better. But like, there could be a lot of collateral damage because you got an AI talking to somebody and it's not working and it's bad on the brand and it's a bad experience. But you might do more sales, right? Because you just got the things doing 1 million or 2 million outbound calls where you're only able to do maybe 10,000 or 100,000 with your sales team before, right? So you're doing more business, but you're like leaving a crazy wake behind you, right? It's going to be interesting to see where all this plays out. I mean, I know when I worked at this tech company, payments tech company, to Judd's point, like we had an AI that was fighting fraud. And there were other AIs that were fighting us. It was like the battle of the AI, like whose AI was better to see if they were actually going to get through and like steal money or not, right? So I can see that happening like in sales and all other customer service, like all other forms of engagement. But look, selfishly, I'm trying to pay my United Healthcare premium for a new insurance plan right now. And I wish I could have an AI that I could just set off on the United Healthcare people because I've had like 10 hours on the phone with him over the last 2 weeks saying the same thing over and over again. So,
and I would take it as to pick up the phone for me. I would want somebody to screen my calls. AI in that use case, way better than the outbound.
Way better.
Because we're reducing the amount of noise for ourselves instead of supplying additional noise to the world.
But not when I call, right, Nick? Not when I call.
Every damn time.
This guy, route him right in.
You're in my favorites list.
I just don't answer. I don't answer my phone anymore, guys.
True.
That's the thing. I was like, you texted me about this. Yeah, I'm good. If you would have called me, I would have had my caller ID or whatever. I'd answer it, but like, I just don't answer my phone anymore if it's an odd number. I like once the spam or fraudulent notice comes in my iPhone or whatever, like potentially whatever, I just don't answer it. And if it matters, they leave a voicemail, and I might listen to my voicemail. I probably don't listen to most of my voicemails because most of them are still spam. And
it's true.
It's going to be interesting. I really think the FTC is just going to be ready to like go after this, because like they have to protect consumers. And this is going to lead to just more of the same that they've regulated over the past however many years. That they just can't do this, at least on maybe B2B, like it's just different. But B2C is where it's going to get abused, and and that needs to be regulated.
Well, I will say this, being a business owner, okay, there will be a period of time where it's like free game, and it's going to work in a big way. So I'm not going to lie to you. Like I am like, there is going to be a 12 to 18 month period of time. That's my estimate, right? Where this is going to be a game changer for people who are like early adopters. And to Nick's point, where like the tech actually like works. It's not like, long pauses in between interactions. So like when those two things converge, there's going to be like some period of time where, like in our, like I sell to advisors, right? I guarantee most advisors won't have an AI answering the call, right? So
their broker-dealer won't let them do it.
Yeah, I could turn this loose on advisors and call every advisor, whenever, however frequently would make sense with whatever message I wanted to communicate. And that would work for probably some period of time before people caught on that they were talking to an AI.
I do think with all the adoption stuff that's happened over the past year, 9 months or whatever, where like the paradigm's been completely redefined. I think that 12 to 18 months that you and I, the three of us, used to experience and enjoy and profit off of is like 12 to 18 weeks.
That
max,
might be
unfortunately.
True. Okay. Perfect segue into the next topic. This is great. Okay, so Musk announces his new AI company, xAI. Okay, so that's out there in the universe now. So these things are popping up all over the place, right? So Nick, here's one that's close to home, right? Are you seeing any of these AI companies starting to trade on the secondary market? Like I was in APU last night. I saw there were like a handful in there that prices are starting to come through. Like OpenAI was in there, right? I saw that one.
That's right.
But are you seeing like interest and demand kind of out in the secondary now for some of these AI companies that are popping through?
Absolutely. So it's funny because we've seen a lot of the blockchain names kind of disappear and wane, and that was maybe not a fad, but a trend that was less supported now than it was a year ago, and it's being replaced by a lot of these AI companies. So they're coming in thick and fast, and we are seeing them kind of trending in a positive direction, which is interesting. And we just started getting a bit, not enough to substantiate pricing yet, but on xAI from Musk. So
really?
Interesting. I think it will, especially for you. You love watching everything that he's doing.
Yeah.
So next week or the week after, if we could start getting some composite pricing in there, it'll be interesting, right?
Oh, that is interesting.
But
very cool.
I think AI is the new flavor that we're going to see more companies being priced on in the secondary market for sure. So
crypto NFTs out, AI in, right? Kind of in the secondary.
A big pop in Ripple recently just because of some approvals with the SEC or acceptance from the SEC. But aside from that, most things are trending away from blockchain and more towards AI.
Okay, so Judd, it kind of begs the question. And so like some of these companies are coming, they're getting some nice valuations out there, right? A lot of them are young or newer businesses, but like, how do you think about this space? Like, are there certain, do you think there's going to be certain winners? Is it going to be like kind of a Apple App Store, Google, Play Store, and then a whole bunch of apps on top? So like, 2 or 3 big winners, and then there's some other people that are sprinkled on top that kind of come and go? Or like, how do you think this is going to shake out for AI?
This is definitely not investment advice, but I would always correlate to where the blue chip LPs are on this thing. And that's where OpenAI stands out because of all the Microsoft interest, if nothing else. But I think there's going to be a lot of, churn in this market, just like everything else, but there will be for real winners. OpenAI is clearly has a superiority around that, in my opinion. Without looking at Nick's data in particular, I'm sure it's going to tell some really interesting stories.
Yeah. So, I mean, I think that, like, my 2 cents on this is, I think the big cloud providers, they got a massive competitive advantage, right? And like, to your point, Judd, like folks that align, AI companies that align with those big providers, like OpenAI is with Microsoft Azure, Google's got their own, Oracle has Cohere, which is a company out of Canada. So like, Amazon's, I think, going to do their own, but it looks like they're maybe open to partnering with people too. So like that could be those that kind of get the blessing from a strategic partnership perspective. I think certainly are gonna be interesting, like, platforms for people to build up, especially enterprises, right? Enterprises that build off those platforms, because they're like kind of like seamlessly integrated into those cloud platforms. But
well, I think you're going to have a ton of walled gardens here, right? And that's where I think you're probably nailing it. It's going to be AWS, Google, maybe a little bit of Oracle and Microsoft. Right. But look at what Elon Musk did with xAI, and he's really saying, I don't want any part, I think since 2018 with OpenAI, I'm going to make my own. And now they had a $2 million agreement, OpenAI, with Twitter, that he's completely severed. And I think this walled garden approach is going to be really important, because Microsoft has access to LinkedIn, so Activision, which is Blizzard.
You're talking about data, like access to the data?
Yeah.
Right.
Because that's what's going to power this up. One monster that they also have at Microsoft is GitHub, right? So if you're trying to write some code, to have access to that is incredible.
Yeah, that is incredible.
A $2 billion investment from London Stock Exchange Group.
Right.
So I feel as though everybody's going to be hoarding their own data and not allowing it to share across any of these major AI platforms, because that's how they're all going to get powered up. So with Twitter and X, you're going to have a lot of like public sentiment that no one else is going to get the same way, and depending on how Google approaches it, maybe they can have some, but I'm sure Facebook can have a lot more with some of their products. So everyone's going to have their own niches, and nobody's going to want to be sharing any of this content across platform.
Yeah.
So I think privacy rules are going to go outrageous on this stuff.
That is really interesting.
Yeah.
This is going to be, like, as an investor, you think about this stuff. Clint talks about these like picks and shovels approach. Like, when this type of stuff's going on, you want the blocking and tackling. To me, that's like the cloud provider. It's kind of like the data providers, Nick, to your point, like the Judd, to your point, kind of like these, like big platforms. That seems like right now to be the place. Like, I will say some of the sexy things that are coming up are like Air AI. Like, Air is not using their own AI.
Right.
Or they're probably using somebody else's data, somebody else's cloud platform, and maybe they're building their own models, right? Or they might be stitching it together from a whole bunch of other different companies, through APIs and whatnot, to kind of deliver a solution. So, like, someone could replace that.
Yeah.
Pretty easily, right? So like, it's going to be interesting to see how this plays out. But I mean, if you got to put chips on the table, I think those areas that we discussed that I think are most interesting, right? At least in my opinion. But okay, let's switch gears real quick to IPOs. IPOs are like starting to happen again, right? So like Cava went this year. Kenvue was a spinoff of J&J. That's like a lot of their kind of more like retail brands they popped in there. And that did really well. That was a big one, but spinoff, but still kind of like oversubscribed. But like ARM, there's Discord, Instacart, Reddit, Databricks, Stripe. I mean, all these guys have been kind of buzzed. Toro's out there right now. That's a kind of like that car rental shop, right? They're out there right now with the bankers, and they're kicking tires on it. And then Sam Altman just announced this week, who's the founder of OpenAI, that his SPAC, he's got a SPAC, everyone has one, that his own fission nuclear company, they were going to do a merger, right, reverse merger, and have that company go public. So the question is, and what I'm interested in, is we still see these kind of like depressed prices, I think, in the secondary market, right, for a lot of the venture capital companies that are out there. So last primary round was really high. Secondary market price is much, much, much below. And that's not true for all. Like Epic Games that came out, Klarna came out. So some of them kind of repriced down back into the primary. But do you guys think, because there's a lot of people I'm talking to are like, IPO market's picking up. Like, do you guys think that before this stuff starts to go, that they're going to have to do like another primary round, these companies, to like kind of reset the price of the business before they go public? Or do you think they're just going to take them and, you know, if it's a Stripe that was at $50 billion, right, that they just did with this last round through Goldman, that like everybody got the phone call, right? I mean, I talked to a ton of people, Goldman private wealth advisors calling individual people saying, hey, do you want an allocation? Like, are they going to have to reprice lower again? Or can they just go to market and say, hey, we're going to go at 50 and people will buy it? Any strong opinions there?
Man, it's a timing exercise, right? Like, you know, I think that's really it. Like, how's the market going to handle the next quarter? And if it's gonna stay on trend with at least the last 90, 120 days, then I don't know if I'm gonna need to raise. But like, you know, everybody's gonna be checking their cash by the second in terms of like where they need to be. And then I think they have I would probably, if I was Stripe, you know, I'd have a team on standby to like go and raise the money. Have it committed if it's going to be available. And then, you know, if the market holds up, then we file with, I'm not sure how much time it takes. That's not my expertise. Like, you know, once I say, hey, let's go, let's list.
The S1 and all that.
Right. I mean, how much time that truly takes to do that. But I got to imagine it's just this like really tight tension in this probably next 4 or 5 months for most of that list of companies.
Right. I mean, Nick, you like live with this data, right? And I know you and I had a conversation some time ago about like what happens as a company gets closer to IPO. I mean, like, you seeing anything through the numbers there, or just in your conversations with folks that might be interesting for us to think about?
Sure. I don't think we've seen enough activity, but I liked your comment on Stripe, and I liked the comment on Klarna. Like, those companies now priced down, made it very clear to the public that those are recent valuations, and now if they went public, I think they're both up since those rounds. That's a good look, I would say.
I think so, yeah.
Coming into it, would if I was at Klarna or similar and didn't take that down round, would I take a down round and then go IPO right after? That's something I don't know how I would approach. But I would say, yeah, Judd's probably right on the timing issue. Maybe you want to smooth it out and do a small round prior and give a favored position to a few funds that you really want to hold it, moving over to your big asset managers, your 40X, things of that nature, allowing some liquidity to the later stage VCs that are involved, because that's a big issue that we're hearing is when a VC wants to come into an IPO and let go of their holdings, oftentimes it's pretty damn hard because there's still not enough liquidity, and they're just holding these public funds that their investors, their LPs, never really signed up for. So maybe there is a world that works very, very well. We haven't had enough data to show it, though. We haven't had enough IPOs, you know, beyond Kava, and hopefully we'll start to see some things happen with Reddit. But even there, and Discord and the others, even there, their pricing range was something like 10 to 15 billion. We're seeing it priced below that in the secondary market already.
Oh yeah.
So I'm super curious to see how they want to play it.
I mean, I wouldn't want to be one of these bankers, especially if you had a company like, I don't know, you take a company at like, I'm trying to think of why, like, you know, Databricks, I don't think has done another round, but they came down on their 409A like pretty substantially. But like, if you're a banker and now you're out there and you got this last primary round, right?